Good morning everybody and welcome to the SmartCharts European session. Hope you are all well. Alright, so it's a big week ahead, lots of different news announcements coming out. So first of all, there's a big focus on CPI, consumer price inflation. So we have German preliminary CPI data on Monday, Switzerland CPI on Tuesday, and Australia CPI on Wednesday. And inflation is very important for currency traders, and inflation simply measures the change in the price of goods and services in an economy. And it's very important because it's used by central bank as a target for their interest rate policy. And generally speaking, when inflation is rising and things are getting more expensive in an economy, this is where central banks tend to increase interest rates to try and get people to spend less in the economy and bring prices overall down a bit. And when inflation is falling, central banks tend to cut interest rates to get people to spend a little bit more on the economy and get that economy picking up again. So it's quite a tough balancing act for central banks actually. And really among most countries around the world, developed economies, we've been seeing falling inflation, okay? So it'll be interesting to see if we are still going to get falling inflation, if central banks will still be cutting interest rates. Right now, many of them are just on hold, okay? But if we get more negative inflation, then that could become quite interesting. We could see some more deeper trends in those currencies. So for example, we know Germany is really the powerhouse of the euro, and we know the euro has been going down for quite some time actually, in particular against the US dollar. It's been very weak. We know Swiss franc has been very weak as well, okay, which is falling inflation. We've had dollar Swiss rallying higher. Some of the other Swiss pairs have been a bit range based because other currency pairs have been quite weak. The Swiss has been quite weak, so they're actually reason why they're ranging, okay? So it'll be interesting to see how this does develop. The Australia CPI, if you have been trading trends, you've probably been trading a lot of the Aussie pairs. We've had a big sell-off there in the Aussie across most pairs. So let's see how these inflation figures affect the trend of those currency pairs, and if we're going to get some more continuation or see some more profit taking and maybe some trend reversals. We also have a lot of jobs data coming out from the US this week. We have the job openings report on Tuesday. We have the FOMC meeting minutes on Wednesday evening. We have the unemployment reports on Friday. We have the non-farm payroll reports as well. So it's a big week for the US dollar. And again, if you have been trading over the past several months, in fact, you probably have been trading a lot of the US dollar pairs because that's where all the flows have been, okay? And that's where all the trends have been since the presidential election beginning of November. Big rally in the US dollar. We've had euro dollar, pound US dollar, Aussie US dollar, Kiwi US dollar, all driving lower. We've had dollar CAD, dollar Swiss, dollar yen, driving higher. So that's been a really, really big theme. So we need to be a little bit careful this week, okay? Are those traders still going to keep on buying the US dollar in front of these high impact news announcements, or will they start to think about maybe tightening up stop losses, maybe profit taking? So we're going to be mindful of how the market is positioned and how we're coming into these high impact news announcements. Now remember, we look at high impact news announcements not because we're trying to guess the outcome, okay, or guess how the market will respond. No one knows. We look at news announcements for several reasons. So first of all, risk management, okay? The market is quite correlated, and when there is a big trend, you might find yourself trading a lot of currency pairs on the same kind of currency. So for example, the US dollar is the big theme right now. If you have been trading trends, you've probably been trading euro dollar, pound US dollar, Aussie US dollar to the downside, maybe dollar Swiss, dollar CAD to the upside. So you need to be a bit mindful if you have a few US dollar trades on, you're coming into these high impact news announcements, because if there's a surprise and the market goes the other way and the dollar turns, you might get hit on all of your trades, okay? So you want to avoid taking a lot of losses in a short period of time because it affects you mentally. So risk management, very, very important, okay? Second reason we look at news announcements is for any surprises. So we know from the trading certification workshop, your 3-day Learn Forex program, day 1, where we go through how the market actually works, how the flows are created by the larger institutional speculators. And we know that everything's already priced in, okay, because it gives them time to build position, because their capital size is so large, is why they hire all the research analysts as part of the trading desks. So in this instance, if we get any surprises in economic data, then that can force a lot of people to readjust their portfolios, okay, readjust their positions, and that can cause some really big moves in the markets. So not all the time, and sometimes it's very volatile and messy, but then sometimes there are some good opportunities, and that's basically what our job is, okay, you know, just to look for the different clues the market is presenting to us and try to, you know, trade those clues consistently and objectively to get a statistical edge developing for us over time. Okay, so it's a big week ahead with lots of different news announcements coming out. I'll do my very best to update you with all the latest news and trading opportunities around them as we develop through these webinars, but make sure you're tuning into all the other live trading webinars happening every single day and interacting with all the other live traders, and also trying to capitalize on different opportunities that are developing in the market. For now, let's dive into SmartCharts and let's get an update from a technical analysis perspective. Okay, so if we look at the tools tab here on the currency strength index, so something we can actually see, and I like to really start off my day with this because it just gives me a broad picture perspective of what's going on. And if you're looking at it every day for just a few seconds, you really then get a deep understanding of actually where the moves are, where the themes are, where the trends are, and that's very useful when it comes to trading. Okay, so in this instance, really what we can see, we've got a lot of strength in a commodity currency, so Kiwi, Aussie, Canadian, and a little bit more weakness in some of the other pairs like the yen and the Swiss franc. All right, so really what you want to be doing, if you're like a lower time frame, fast time frame, short-term trader, okay, you really want to be pairing up the strong currencies against the weak currencies, because currencies are paired, aren't they? When one currency is rising, the other one is falling, and vice versa. So really what you want to be doing is buying the strong currencies because there's strength there, and then selling them against the weaker currencies because they're weaker. Okay, now if you're more of a medium to higher time frame trader, then you might look at this and say, okay, well look, this currency is really strong, this currency is really weak, and it has been so for maybe several days, several weeks if you're tracking on a daily basis, but you might then be looking to see if it's coming into some really significant levels of support and resistance where maybe some profit taking could take place or a trend reversal could take place. Okay, so that will become quite interesting to see how you use it. It depends, of course, on the style of trading that you're participating in. But this will be quite interesting to track over the course of this week, especially the US dollar, by the way, because over the past several months, the US dollar has always been pretty strong, okay, one of the strongest. So that will be interesting to see if that does start to turn, because we are quite far into some of those US dollar trends. So it'll be interesting to see if we do start to get some reversals, okay. So we'll be keeping an eye on the technical levels developing on those dollar pairs as well. But we can see, broadly speaking, you know, we do have a lot of strength in some of the commodity currencies, so we could get a lot of activity around them this week, so something to keep an eye on. Okay, one currency pair that has been highlighted from the London and Sydney trading floors is actually Aussie against the Canadian dollar here, on the 180 phase changer strategy on the daily chart. Now the 180 phase changer strategy, one of my favorite strategies in fact, and it's very useful in helping to identify any momentum trends developing in the market. So in the currency market, you have a lot of different types of market conditions, and you have a lot of different subtypes of market conditions, and then all your different strategies inside of SmartCharts will just help to identify and trade different types of conditions that the market could potentially be in. So the phase changer helps you to identify and trade momentum trends, but there's strategies that will help you to identify longer term trends, shorter term trends, complex ABC corrective wave cycle trends, super cycle trends, you know, ranges and consolidations, and all these other types of market conditions. So in this instance, using technology to help filter out all those different conditions, it's a great feature, okay, rather than trying to click on everything, analyze everything, do everything yourself. You know, it's prone to user error and obviously takes a long time. Now with the phase changer strategy, it utilizes moving averages, the yellow line and the blue line on the chart, and moving averages just give you a average price direction of the market, okay? And it also uses relative price patterns like ring highs and ring lows. If you're not familiar with how SmartCharts is actually helping you with your different strategies, then just make sure you're reviewing all your e-learning materials in the e-learning section of SmartCharts. Ton of really fantastic resources there to help you in your trading. Make sure you're attending all your live events, so your online classes, webinars, workshops, boot camps, and so on. And of course, you know, most important, your coaching sessions, okay? But really what we want to be doing is pairing up algorithmic technology, AI technology, what SmartCharts are doing, with a bit of a human insight pattern recognition, okay? So on top of what SmartCharts is looking for, we also like to look for some other clues the market is presenting to us and just stack as many clues in our favor as possible. So there's a couple of things I look for, literally just two things that I look for here on all the daily chart trend strategies. So first of all, I just like to see confirmation that speculators are actually building positions in the market in anticipation of lower prices, because there is a fundamental narrative on why they're doing so. And the simplest pattern to give us that is a lower low, lower high cycle. So what we have here, right now we're on this blue line, okay? And if we look at this blue line here, what we can see is that sellers have actually been cycling off this blue line, okay? So every time we come to the blue line, sellers have driven it lower, come to the blue line, sellers have driven it lower. So we'll be looking for clues here on this blue line to see if sellers are going to turn up here again and keep driving it lower, okay? So, you know, the past is no guarantee of the future, but history does tend to repeat itself, and that's what we try to do, you know, stack those type of clues in our favor. I also look at the second thing I like to look for, the final thing, is, you know, some other type of you know, resistance on the chart. So this could be a trend line, for example, okay, an angular price where sellers have been turning up here before. So, you know, maybe they could actually turn up here again. Also, interestingly, we have this low point, this turning point here, where actually price broke through it, and now maybe it could act as a level of resistance, because support can turn into resistance, resistance can turn into support. We can often get those switch over. So actually what we end up having is a confluence of resistance areas on the chart where sellers could potentially turn up, with a higher probability chance of sellers turning up. So on top of helping to identify the opportunity, SmartCharts will also help with the most important part, and that is risk management. If we click the down icon here, we'll populate an entry price at the blue dots, opposite the red dot, target the green dots, and it will do all your percentage risk, reward to risk, and currency conversion calculations for you. And then I like to set an expiry of a current bar close on this particular strategy and time frame, and then decline or accept the trade here at the bottom. And those can all be adjusted according to your own user preferences, of course, okay? If you're a beginner trader, you might just stick to those levels. If you're more of an intermediate advanced trader, then you might be adjusting those levels, it's fine. But the key there is really to keep the risk low, okay? Make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, the week, and the month. So in this instance, either if sellers don't turn up and go to the entry level, then the pending trade will just expire. Didn't win, didn't lose, didn't cost anything. If sellers did turn up and go for the entry level, that will trigger into a live open trade. Then either it goes to the target level, the green dot, and it's a winning trade, or it turns around and goes to the red dot, the stop loss, and it's a losing trade, okay? Alright, so there's plenty of other things developing earlier on in the week, so let's see how it does develop. That's it from me. I'm going to wish you all the best for your trading. I'll see you next time. Bye for now.